I know one of the things that you disclosed on the call was a backlog that is 2 times normal at $1.5 billion, that you find that encouraging. Where is that demand coming from, and when would you expect it to manifest into sales?
Sure. Obviously, this was a different quarter, and we lived the impact of the full quarter impact from coronavirus, because our quarter was pretty much the entire coronavirus quarter. And as you stated, we exited the quarter with a very significant backlog, which is 2 times the historical levels. And that demand was across compute, storage, and high-performance computing, and our mission-critical systems. So our order linearity, what we call linearity of taking the bookings, was pretty steady. In fact, it was one of the best quarter linearities we ever had. But unfortunately, because of the supply chain disruption, we couldn't convert all the order book into revenues. So we expect that obviously to improve in Q3 and obviously in Q4. And that has been my priority throughout Q2, to continue to improve the supply chain recovery with our partners. And we have made good progress. But obviously, it created a significant disruption in our supply chain. But we're making progress every day.
So listening to your comments about supply chain disruption, then do you see the quarter that you just reported as the bottom in terms of the impact from COVID-19?
I believe so. I believe so also because as I think about our pipeline and the progress we made in some of the key areas despite the coronavirus 19, where our Aruba business, which is the intelligent edge business, did extremely well. We outperformed the market. We grew in North America 12%. We grew our wireless solution by 7% worldwide. Obviously, our strategy is to pivot to make available everything as a service by 2022, and our HP GreenLake business did extremely well, where we grew again our annualized run rate revenue by almost 20%, 17%, and and so those are the signs that give me some level of comfort. But ultimately, we have to clear the backlog, and that's why our priority is to continue to focus on that area.
Antonio, it's not uncommon these days, especially in the last quarter, where companies have come out with a restructuring program, a cost-saving program. The street says, well, we're going to bet that these headwinds are temporary and the cost structure will be fixed lower. That's a good thing in the long term. Why do you think the stock's not reflecting that viewpoint today? What would you say to people who doubt that?
Well, I have a few learnings here, and fundamentally, we're going to live a new normal. Obviously, I'm talking to you from my house. We see the world where it will be way more distributed than before, which actually plays great to our strategy with our intelligent edge products through remote secure connectivity and moving the cloud experience to the edge. But fundamentally, we believe we have the right strategy, and to become the edge-to-cloud platform as a service company. And I believe in tough times like this, which is an unfortunate event, is the time to go faster. And this is where we're going to take this unfortunate event opportunity to really accelerate our strategy. And therefore, we announced the cost optimization and prioritization plan, which allows us to continue to make efficiencies across the organization as we improve the business performance of our core business and go faster in our pivot to deliver everything as a service. So that's the intent here. We learned a lot in the 2008, 2009, and these are the times where you need to really take deterministic action with assertiveness, and this is what we're doing.
You're not the only ones to think of a buyback program and a dividend as 2 separate things. I just wonder, can you explain to investors and viewers, what was the calculus of saying the dividend is more sacrosanct than the buyback?
Well, obviously, in our stock, we have different type of investors, and generally, our investors more oriented to the value side of the house. We believe, paying the dividends is very important. So we plan to continue to pay the dividend. In April, we announced our Q3 dividend that's going to be paid in July. And yesterday, in our remarks, my CFO, Tarek, clearly articulated that we're going to review the dividend for Q4 at the end of our Q3. We look at the buybacks as an opportunity depending on the stock price, but fundamentally we also want to deploy a very dynamic capital allocation that continue to accelerate our strategy. So for us, dividend obviously plays a significant role, but the rest is about making the right investment for the best return for shareholder value. And we have a very stringent and disciplined return on invested capital practice here, which we have executed very well in the last 2 years. Considering in the first 2 years we did $7 billion of return of capital to shareholders between 18 and 19, which is what I committed in my first earning, and we deliver that. But now is a whole different story, and we believe it's important we invest also in the future.
So, Antonio, you just touched on the fact that this pandemic is going to create opportunities for HPE and what that means in terms of, I guess, the conversation we've been having for a number of weeks now on this show around sort of the acceleration of the digitization of everything. I'm curious what it's going to mean internally at HPE as you think about bringing workers back into the office, real estate footprint, what all of that will look like for the company moving forward.
Yes, and in 2017, I launched a program which a component of that was to simplify our business processes and modernize our IT infrastructure. We are well underway. This, in the end, when we're done by sometime next year, we'll have one integrated end-to-end platform for the company where we can build now these digital engagements. We have been on a journey also on our digital marketing side, but ultimately it's different customer engagements through the digital motion. And so that's an important aspect. And obviously we have the technologies like Aruba, which provides, pervasive ubiquitous connectivity from the cloud. And by the way, that platform now has more than 65,000 customers already connected through the cloud. So for us, as I think about the workforce and what it means, I envision the place itself, the sites it place, as a way to come and collaborate, to inspire yourself to really drive that innovation, not to come and do the regular job that everybody does at that desk. So for us, we are envisioning that, and we believe we have the technologies to develop and deploy these new workplace services, which obviously we're going to make available to our customers as well. So as I think about returning to the work, I think it will be in a phased approach when we feel it's safe to do so.